Welcome to Real Estate and You. I'm Gail Freeman with Century 21 Woodland Realty. Today we're going to have Dione Oliver talk with us on a program, Back to Work. But before we get started, Dione, I want to welcome you on the show again with us.
Thank you.
I would like for you to give us a little information about yourself.
That is Dione Oliver. I'm currently employed with Ross Mortgage. I've been a loan officer for more than 10 years. And prior to being a loan officer, I worked in the real estate industry. I worked for some of our top producing real estate agents, which led me into the mortgage world. And again, I thank you very much for having me today.
You're welcome, Dione. Well, let's get right into the program today. I'd like for you to talk to us about this Back to Work program. What is Back to Work program?
Well, the government has decided to put out a program for people who were affected by the economic downfall. So what they've done is they said, okay, we're going to design a program that will allow people who lost their job due to the economic downfall to be able to apply for a mortgage on a 30-year fixed rate. It's insured by FHA, which is HUD, obviously. And what it does is it will give you a 30-year fixed rate mortgage. So let's say, for example, you lost your job during the economic downfall and that resulted in a foreclosure or a short sale or a deed in lieu, bankruptcy, anything like that. What FHA has done is they said 1 year after your short sale, 1 year after your bankruptcy, 1 year after your foreclosure, if you have reestablished, they will now allow you to buy another home. And so what we have to do is we just have to have it well documented. You have to have a minimum 640 credit score. You have to have reestablished your credit to some degree. You have to obviously be back to work now and basically reestablish yourself. And part of the program requires homeownership counseling. You have to attend a program. It's about an 8-hour class that just gives you some counseling on what's happened to you and how not to allow that to happen again.
Oh, okay. Now you stated this program, and it sounds like it's a good program because you're saying it's a work program. In other words, you're saying where a lot of people have fallen short with short sales and foreclosures, if they reestablish their credits and things like that, they can get into this program after a year?
1 year
and
after.
buy another home?
Yes, ma'am.
That is fantastic information. Now, when did this program come out? Just recently?
They announced it, and with the servicers and such, FHA, the government will announce it months before they release it to us. And there are still servicers that are not on board with the program. Ross Mortgages, however, I've already gotten 2 approved, and we're just waiting for our clear to close. And so people who literally had a foreclosure 1 year ago, reestablished a 640 credit score, we documented their income prior to their loss of income, after loss of income, and they've done their home ownership counseling program, and we'll be closing on their home next month.
That is fantastic information. And the reason I say that, I have had so many of my previous clients that have fallen into that loophole of foreclosure short sale, and they've reestablished and their credit scores are really great, but they say they can't get a mortgage.
Yep.
But now it's something that we can advertise. It's a work program, FHA Back to Work program, that'll be able to assist them in getting into a home.
Oh yeah, had they come up with something like this a year ago, 2 years ago, think of all the people that called you and you said, oh Dione, see if you can get them pre-approved, and we couldn't because the typical guidelines were 2 years out of bankruptcy, 3 years out of foreclosure, 2 years out of short sale, depending on the circumstances, and now it's 1 year.
Well, I know I love to hear that as a realtor, and I am sure all of our consumers is going to like that. But let's go on into talking about that program. Give us some requirements as far as eligibility for the person. I know we spoke of the year and things like that. What are some of the other requirements?
Okay. First of all, you have to have a minimum 640 credit score reestablished. We would have to have documentation of your foreclosure, your bankruptcy, your short sale, and what led up to that disaster for you. So for example, let's say you lost your job in 2008. Prior to that, you earned well, your credit was in good shape, the company you worked for closed down, and on a whim you lost your job. That led you into bankruptcy, that led you into foreclosure, but now a year later, you've reestablished, your credit score is back up, what we would do at that point is we would get the documentation from the borrower to show my income was this prior to the economic downfall. This was a 20% decrease in income for 6 months is one of the key factors for this program. So let's say, for example, in 2007 you made $50,000, and then in 2008 you lost your job, and we can document for a 6-month period a 20% loss in income, and now, a year later, you have reestablished your credit, and you are back to work, key, FHA back to work program, then we would be able to supply you with a new mortgage. Again, you have to do the homeownership counseling program. One of the key restrictions that people need to know about this program where that counseling is concerned, you take the counseling today, you may not write a purchase agreement for 30 days. You may not take mortgage application for 30 days after your homeownership counseling program has been completed. So if you take your program, you take your class on 11/6 of 2013, you're not eligible to make application until 12/6 of 2014, or 13, excuse me.
Okay, so 30 days from the day that you take the class.
Yes, ma'am.
So, okay, I take my class, whatever month or year it is, I still have to wait 30 days to take application with my lender.
Absolutely.
Is that correct?
That is very correct.
So that is a very crucial note to have, to know you can't just go in and take this class and all of a sudden say, well, she won't take my application. Well, the whole thing is, it's a 30-day time frame.
Yeah, and one of the really great programs and the way that Ross Mortgage has designed it for us as loan officers is we have all these guidelines here that we have to follow as loan officers, and it's so detailed I won't get into all of it with you today, but there is the check sheet. So when I meet with my client ahead of time, I'm going to ask him for all of that documentation up front. So I'm going to get his previous income, his loss of income. I'm going to get his new income. I'm going to check out his credit very, very thoroughly. I'm going to make sure his assets are correct. I'm going to set in a full file to our head of underwriting, and they are going to go into a room with 3 different people as a counselor, and they're going to say, does this person qualify for this program, before we say, go take your home buyer class. Because it costs money to take that class, and we want to make sure, as a homeowner, or a potential homeowner rather, that you are qualified for this program before we send you down the road of spending money and wasting your time as a realtor, their own time, and the heartache of it, unless they are actually truly qualified for the program.
Fantastic. Now, what are some of the assets that you're saying that they might need or know about?
Well, you have to document the type of economic downfall that they had, first of all, the date and loss of income. Again, you'll do that with W-2s and a verification of employment. Any documents that they had, let's say you had a short sale, they're going to want the package from your short sale. Or if you had a bankruptcy, they're going to want your bankruptcy papers. We can pull sheriff's deeds and such as that online ourselves, or with the help of a title company if necessary. We're going to look at your credit. Your debt to income ratios have to make sense. There are no waivers for higher than a 43% total debt to income ratio. Some of the other things are there's no 30-day late payments in the last 12 months. I mean, everything like that has to be to a T. We'll verify that you are in fact 1 year out of short sale, you are 1 year out of bankruptcy, you are 1 year from your deed in lieu or sheriff's deed, whichever the case may have been for that particular situation. We're going to make sure that you have the 3.5% down that's required on all FHA mortgages. This one as well. FHA Back to Work program still does allow your down payment to come from a gift, although we always prefer to see it from the borrower. Gifts are allowed. Up to 6% seller concessions are still allowed on this program. So in essence, if you have a buyer and they meet all this criteria, and I say find them a $100,000 home, we can go out and we can let that borrower know, let that realtor know they're pre-qualified, $100,000 loan, 3.5% down, up to 6% seller concessions to help pay their closing costs. They can buy a new home in essence for about $3,500 out of their pocket.
Fantastic.
On $100,000
That
loan.
is some good information,
Yes,
Dione.
ma'am.
Now, let me, tell me a little bit about this gift. You mentioned that they can have a gift. Who can they get a gift from? And what do you mean by a gift?
A gift. So let's say you're recovering from your economic downfall, your income is back in line, and you don't have a lot of overextended credit, anything like that, but you're short on cash, and you have a parent, a family member, somebody like that who is willing to help you get restarted by gifting you that 3.5% down payment.
In other words, you mean a gift not to pay back.
Absolutely.
So it's not like, okay, Mom, I need you to give me this $3,000 and I'll give it back to you after I close.
No, ma'am.
That's
It is
nothing
a
that you
true
need to.
gift.
It's a true gift.
Yes.
And we must remember that a gift can be, is it just family members or can it be outside of the family?
Family members is what's required because you have to document relationship. Now, of course, there's so many families now where you have stepmothers and stepfathers and step aunts and uncles. With marriage licenses, we can, as long as we can link that person in a family, under that family quotation. And so sometimes even longtime friends, like let's say, for example, my mom had a best friend and she was a part of my life, my entire life. My mother's passed away now, and she says, you know, Adi, I'm going to go ahead and I'm going to help you out in your time of need, and we can document that long-term relationship. Then in rare cases that happens too, but we like to see a documented paper trail of a bloodline or of a marriage, something along those lines.
There's always an exception to the rule.
Absolutely.
And if you have
almost with everything.
Almost with everything. And if you have questions, you can always call and ask your lender, what do you mean by this, or can I use this? And in your case, Dione, they could call you there at Ross Mortgage at, what number is that if they had to call you?
810-625-7381. You could also text message me. I don't mind that. And my email address is doliver@rossmortgage.com.
And that's good information. Like I say, if you have a question, you always go to the expert. Now, what would you recommend as far as a person wanting to pick a loan officer to help them with the process? What are some of the guidelines you would say if I was looking for a loan officer? What would I look for as a consumer?
You would look for somebody who is available to you 24/7, which, Gail, you and I have worked together. You know that I am.
Many years.
You want somebody that's dependable and knowledgeable, and that's going to do the proper research ahead of time so that they don't get you into the heartbreaking situation of thinking you're approved when you're really not.
Fantastic. It's good to check the history.
Absolutely.
In other words, of who you are going to get. You want to know what is their background.
Yeah.
Are they really qualified to help you in doing this transaction? Because as you stated, you don't want to get to the bottom line and all of a sudden they say, well, I can't do that.
Right. And then, those rare occasions do come up, circumstances beyond the loan officer's control or, information not disclosed. That's one of the key things that a borrower must do is be fully and completely with disclosure 100% to their loan officer, because those hidden little crevices will find a way to haunt you. So I always talk to my clients as, kindly as I can, because people that experience difficult times like that, foreclosure, some of them are really embarrassed by it, and so you have to get right down to their level and say, look, we understand you had a difficult, but we're here to help. Please tell me what happened. We'll write letters of explanation on your behalf to present to the underwriter what happened to you, how you've recovered from it, and we'll have a better chance of getting your mortgage approved with full disclosure.
I know we're still on this the program that you have, but you mentioned to the underwriter. So now once I come to you as my loan officer, do I have to go through some other processes through your office, through your company?
You mean as far as getting approved?
Anything
for this?
approved. You said loan officer, you said the processor.
Right.
So now I've taken my application with you. What's going to happen then?
Okay, so once you've come to me and I've gotten all of your economic situation, credit, everything checked out, and this file is going to go to our underwriter and they're going to send me back an email, or they're going to sign my little sheet that says approved by. At that point, we wait the 30 days. You do your counseling, of course. You wait the 30 days, and then you go find your house with your realtor. Once you found your home, the thing that I always like to do with my clients, regardless of the type of financing they're doing, because obviously I do tons of different types of financing other than just FHA, but in every situation, what I like to do is when the realtor and the client have found a home that they're very interested in, I like to be notified with the address and the price that they're considering offering, so then that way that allows me to do the research with the taxes, give them estimated payment, give them really accurate information based on that specific house, what their payment's going to be and what they're going to need at closing, so that when they write that offer and they come to see me, they're 100% confident in what they're getting.
Fantastic. Now, the FHA Back to Work program. Now, is that a fixed loan?
30-year fixed rate, 15-year fixed rate, depending on the type of financing that suits your debt-to-income ratio and your needs. But it is a fixed rate market.
And you, as the loan officer, Dione, you would inform them what you feel is the best program for them as far as this goes.
Absolutely, yeah. We could weigh different scenarios. If they're in a situation to apply for a 15-year mortgage, then we'll look at that situation. Most buyers, when reestablishing, tend to go toward the 30-year option, and then we'll show them from an amortization schedule what you could do to get it paid off in 20 years, to get it paid off in 10 years, how much additional to apply to the principal to get their loan paid off in a much faster time.
That's what I was going to say, because if you go into a 30 versus the 15, you still have that time where you can pay more toward the principal and still get rid of that loan faster than the 30-year time frame.
Absolutely.
Correct?
Yes, you can. Yes, and one other thing I'd like to mention about the FHA Back to Work program, and all FHA loans for that matter, there's mortgage insurance on them, regardless of the amount of money that you put down. And mortgage insurance now with FHA is over the life of the loan. So one of the things that I always tell my clients is, while you are reestablishing yourself, because after a foreclosure you have to wait 7 years before you can purchase a home on a conventional mortgage. So what I like to tell my clients is, try to pay that principal balance down as much as you can, and after that period of time, which would now allow you to refinance into a conventional mortgage and out of that FHA mortgage, to get rid of the mortgage insurance premium, because it's quite hefty these days.
Can you speak a little bit on mortgage insurance?
Yeah, FHA specifically, their mortgage insurance premiums have increased over the years, and a lot of it is due to all of the foreclosures. You know, when you have an FHA mortgage and it goes into default and it ends up in foreclosure, HUD is who pays the servicer off for your mortgage. So say, for example, City Mortgage is your mortgage company, and it's an FHA insured loan and it goes into foreclosure. HUD's going to pay off City Mortgage on your behalf, and now you have a claim with HUD for a 3-year period, which would disallow you, except for the FHA Back to Work program, to purchase another home on an FHA mortgage. So with all of that being said, what HUD has had to do to recover some of those losses is raise the upfront mortgage insurance premium, raise the monthly mortgage insurance premiums, and a part of that has resulted in FHA mortgage insurance over the life of the loan.
Is it a way we can get rid of the mortgage insurance?
On an FHA mortgage, the only way to do it that I'm currently aware of is by refinancing out of the FHA mortgage.
And go into a different type of program?
Yes, ma'am. Yeah,
more or less a conventional.
Yes, and the only time you're going to completely get rid of mortgage insurance is if you go into a conventional loan and you have 20% in equity.
Oh, 20%.
Other than that, yeah, the conventional mortgage insurance rates are based on credit, based on down payment, based on, loan to value.
Okay, fantastic. Dione, this is some real good information, because the program is fairly new.
It is very new.
And it just sounds so good to be true.
Yes.
And I'm sure that our consumers out there is glad to hear that I've gotten into a situation where I've gone foreclosure, I've gone short sale, but now I've reestablished myself after a year.
Yep.
Now I can go to Dione at Ross Mortgage and put in for an FHA Back to Work program.
Yes, ma'am.
And they've gotten their credit scores up to 640, and they've done good throughout with no late pays and things like that to make them have good credit. That now I can do that program, and that is so fantastic to hear. And I am so glad to have you on the program with that. Now I would like for you to give us just a few more pointers on this FHA Back to Work, and kind of go back over it so they understand exactly what they need to do.
Highlights of the program.
Yes,
Okay.
to get involved with this with you at Ross Mortgage or their lenders.
Okay, well, basically the FHA program, like I said, is designed for people who have gone through the economic downfall. So what we'll do is we will pull credit. You need a minimum 640 credit score. We will verify the dates and times of your loss. So if you worked for 2 or 3 years, we'll document that. You've been off for a year, we'll document that. Now you're back to work, we document that. We document your assets. We document all of those things. We'll get you pre-approved ahead of time. And then issue your pre-approval, you do your home buyer counseling, and then you find your home and go to closing. Some of the minimum requirements: 640 credit score, you have to have a 20% loss in income for a minimum of 6 months, 43% debt to income ratios, and I don't expect all of you to know what that means, but all you have to do is call me and I will get it figured out for you. Those are the basic highlights of it. It's not a difficult program. It's underwritten pretty much the same as any other FHA mortgage or conventional mortgage, such as that. And Gail, let me just mention one more thing. We touched a little bit on what happens when you foreclose on an FHA mortgage and the HUD has to pay the claim. You have a HUD claim against you for that 3-year period, and that's something that's called a KVIR number. So let's say, for example, you lose your house in foreclosure and HUD pays your claim, and you have a typical waiting period from the HUD claim of 3 years. With this program, FHA, the government, is recognizing that people lost their homes. They were FHA homes, and they currently have a HUD claim against them. But they're offering a HUD KVIR waiver. And what we have to do as a lender is, once the loan has been approved, and this is one of the files that I have now, and I'm experiencing it, so that's one of the reasons why I want to touch base on it, because it's delayed us about 2 to 3 weeks longer than we had initially anticipated. As you said, this is a new program. Everybody's getting on board with how it works, and so I don't want to mislead anybody that this is going to happen in 30 days or 45 days. You very well can, but when you apply for this FHA Back to Work program, and HUD currently has a claim against you, we have to send in directly to Washington a request for a KVIR waiver, and that can only be done by our underwriters once the loan has been approved. It is physically overnighted to Washington. They wait 15 days before they even look at it. And then they will review the file themselves, make sure that all the I's are dotted and T's are crossed, give us our HUD waiver, and we move on. So that is only in an instance if you've had a previous FHA mortgage that went to foreclosure, you currently have a HUD claim against you, then there is still an opportunity for you with the HUD waiver to apply and be approved for this program. And I have one now. We're waiting on the waiver, and we're going to closing.
You know, that I like to hear that too, because a lot of times when the client is there and they're thinking they're going to close in 45
Yes.
days, and then all of a sudden you come up and say, well, no, we got to wait some
3
more
more
time.
weeks,
Right,
right.
3 more weeks.
Right.
But I think as a professional loan officer, you're able to let them know about the claim already against what they, when they lost for foreclosure, that now we might have some more extended time.
Yes.
And that's good to give them that information up front.
Ahead of time.
Right. Now, I noticed that you also had more information on some other FHA programs. Can you enlighten us on a little of that?
Well, they're the FHA 203K and the FHA 203B Repair Escrow, but truly, Gail, those are programs that would probably need their own segment just to kind of go over all of them.
Yes, that is 203K. Those programs will need a little more detail in that. And I would love to have you back again to talk on the 203Ks, because there's a lot of different programs within that program in itself.
Absolutely.
So I'd like to extend an invitation for you to come back so we can discuss the 203K.
I would love that. I would love that opportunity. Thank you.
Well, Dione, I really want to thank you today for coming out to talk about the FHA Back to Work program, because that is a program that is just coming, in a sense, hot off the market.
Yes, ma'am.
And that's going to bring our economy back up once we can get a hold of those people that have actually lost their homes for foreclosure or short sale or deed in lieu or whatever the case might have been. So I'm Gail Freeman, your realtor from Century 21 Woodland Realty, Flushing, Michigan. Remember, real estate is the #1 investment, and I can find the perfect home for you.